Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. This is the time of year that we traditionally ask our panelists who join us for this particular look ahead to the New Year show for their visions as to what they think the new year will hold. We're going to try and get that from our research director, Shiraz Mian, equity strategist Brian Boland, and market technician Kevin Matris this time around. And, Brian reprising his red jacket here. From the
holidays are right around the corner, so I figured
and you're in
not?
the spirit.
That's right.
And, you know, nobody can fault you for that.
That's right. I'm always in a good mood.
One thing that I'm noticing, though, is that for the new year, you're actually saying that the new Fed chair means stocks are going to end up negative for the year. Didn't take you long to throw her under the bus, did it?
Yeah, you know, I did a little bit of research, and I thought I read an article that said that very idea that the new Fed chair, is generally comes along with a market downturn. But then I went back and I looked at the numbers, and I see it's more about a correction. When Volcker came in, I had to write this down because there's too many stats. In '78, I was just 6 years old.
Right.
Kevin was 25 at that time, and he was already on it. But the market did move up, but that was after a little 10% correction shortly after he came on. The market recovered again, and then another 18% correction before it went higher. I think you also have to put into context when Volcker came in '78, interest rates were around 13.5% and ran up to 20% in his tenure.
So are you retracting that statement then?
I'm saying it's more about there are corrections that come about. Greenspan, obviously, when he was in, the market was down pretty substantially, 18%. He came in '87. Bernanke came in 2006, and that was just in front of, obviously, market highs. But there was a quick correction as the new Fed comes in. I think the idea is that the market participants love to test a brand new Fed chairman.
So you're only half throwing her under the bus at this point.
At this point, I'm just pushing her just a little. She's not completely under.
Introducing her to the curb
right.
or something like that. Okay. All right.
Welcome to the big city.
Yeah. Shiraz, you are kind of bearish for 2014. Matter of fact, you say investing is going to get difficult.
It is, and I think Brian may be on to something. I'm not familiar with the new Fed chair's arrival and the market's reaction to it, but the Fed is embarking on a new experiment. They are in the process of unwinding an extremely loose and accommodative monetary policy. My sense is that the very strong gains that we saw in 2013, which came on the back of fairly good gains in 2012, are a thing of the past. I think the momentum that we have seen at best stalls out, at worst, and most likely retraces the rally. I think we give back a fair amount of the gains we got in 2013, and I'm not calling for a recession. I'm not calling for a train wreck on the corporate earnings front. As I've said and written about before, I think the Fed's policies gave investors rose-colored glasses through which look at everything. And while things are not terrible, they're not as good for stocks to be in record territory and to further build on that in 2014, as everybody and their grandmothers are forecasting 5 to 10% growth.
Kevin Matris, it's not abnormal for a great year in the stock market to be followed by just a good year. So you're looking for a pretty good year, right?
Yeah, let me tell you what me and my grandmother came up with. First of all, when I came down here, I thought I was going to be the most bearish person. So when I looked at my forecast, I was like, oh my goodness, I'm gonna neg everybody out. But you guys, I'm ready to go jump off a bridge. So here's what I think is going to be happening in 2014.
Okay.
I'm still bullish. I do think that we have another bull market next year, although I do believe the gains are only going to be half as much. Now, let's put this in context, right?
So market's going to be less forgiving.
Yeah, well, so check it out. So this year we are up. I mean, we still got another handful of trading days, but it looks as if on a total return basis, we will probably close north of 30%. pretty fantastic. And if we do get above 30%, that'll be the first 30% we see in like 16 years, okay?
All right.
The reason why I believe that it's only going to, and I feel like the most bullish person in the world right now, but the reason why I think it's only going to be half as much is because of a study I had done earlier this year. So let me go through it. In June, I did a new highs cycle study. It was a 58-year study. And what
Bottom line, we don't want to be here till tomorrow.
No, let me go through it. This is very important, the most important thing you're going to hear today, period.
Clock's ticking.
The long story short is there were 11 new high cycles, and a new high cycle is defined as once you take out a previous all-time high. I wanted to see how much more the market will go up and for how long the market will go up before you see a meaningful correction of 15% or more.
Okay.
In the last 58 years, there were 11 such cycles. The median move was 29.5%, and the median duration was 19 months. We began a brand new high cycle in April. Since we took out those old 2007 highs, we've tacked on an additional 15%. But by next October, we will have hit that 19-month mark. And if we go to 2040, that will be a 29.5% return since we eclipsed those old highs. So if you were to
say what exactly?
If you were to take a look at it, since we already did 15%, you got another 12% for next year.
Okay.
But 12% is still pretty bullish. It's going to be tougher, but it's still a pretty good gain.
And you're also looking for finance sector to be the leading
Finance
sector.
is going to be good, business services, and I think manufacturing comes on strong next year.
Right. All right, Shiraz, I have to talk with you about earnings here briefly. Earnings for S&P 500 companies, are they going to continue to rack up new highs in the new year?
Yes, I think we continue to make record levels in the aggregate, the total dollar level of earnings, but there's not much growth. So the low to mid single digits is about the best we can get on the corporate earnings front. The expectation is for close to 11% growth in 2014. But if we get half of that, we're kind of agreeing on the half level. Kevin wants half of the 2013 gains in 2014, and I'm looking for half earnings growth relative to what the market is
Perfect
expecting.
scenario.
Okay, I've got to move on. Brian, one more point you make is that China stocks are going to be assaulted in the new year. What does that mean?
I think a lot of those China names are going to go down significantly. I think we've heard a lot about the shadow banking and then the recent injections from the central bank in China, and that is really not having that much of an effect. I think you're going to see the resurgence of places like Muddy Waters and Citron really taking down a lot of different Chinese names. I think we saw it with NQ, which was a mobile security company that they more or less claimed to be a fraud, still going after them. I think you're going to see a lot more of those types of situations over the next year.
What about investors just turning to foreign stocks in general as an alternative to the U.S. market?
I wouldn't suggest that. As much as Shiraz is the bull and Shiraz is the bear and Kevin is the wild, crazy bull at 12% or 15%. Yeah,
crazy.
I'm thinking 5-8% is still can be expected around here.
I think Europe could be a brighter spot relative to what it has been in the past. So in terms of foreign holdings, look for Europe, look for Japan, look for Canada in the bigger developed markets. Emerging markets, I believe, will remain under pressure, whether it's China or the rest of the BRICS. I think they have seen their tops for now, at least.
All right, we'll give you the final word. There you have a little look ahead into the new year 2014 from a financial perspective. And now, if you want to look ahead into the next segment, you'll get this week's top stock picks from these folks.